What is up, FU Money Nation? We just finished recording. We're at a new location. Bear with us. Today, what are we talking about, Dane?
We got into emergency funds, what they are, why they're important, and we got into some pretty sticky situations. That was a hard episode for me.
Yeah, Dane blows his chest. Financial chest. His hairy financial chest. We talk about toilet paper and your butt. And
How to save your ass.
how to save your ass, seriously.
Yeah.
And multiple those, we're taking a novice investor from no financial literacy very purposefully through a set step where by the end of it, you're going to know how to go and invest. So it's very intentional. Stick around. It's a great episode. We're going to start right now. Enjoy the episode. Welcome back to the FU Money Podcast. FU Dane.
FU, Hugh.
So today we are trying something new. We're doing an in-person podcast. It's bare bones. We just have a laptop. We have semi-good sound, but it might be okay. So bear with us if we have any technical difficulties. And we're in a little place. We are 4x4 Brewing.
All of our favorites.
We are here often.
And before 4, drinking beer.
Because we're retired, allegedly. Allegedly, we're in charge of our time.
Yeah.
There's no, we might have interruptions, people walking in on us. This is a live business, and we're thankful that they're letting us use this room. But if they need it, we might get kicked out.
Yeah. And on a future episode, possible acquisitions of such companies as this and interesting partnerships. But anyway.
Yeah, who knows? All right, so moving forward, today we're talking about thing that a lot of people struggle with. What is it?
That would be the emergency fund.
Okay, emergency funds. And so we're going to go with like, what is an emergency fund, how to build one up, why you would use one, and why they're important.
In addition to, and I don't care what camp you're in, the Dave Ramsey camp, the Robert Kiyosaki camp, any financial person across the globe unanimously agrees with the emergency fund. It is something that all financially literate and smart people have and build along their path, and it's a must-have. And like I said, it doesn't matter what school of thought you come from, what camp you sit in, everyone agrees this is a must-have. And it's something that unanimously also most people don't have. Right. So.
Yeah, a lot of people get in a pinch. And we're going to talk about a few of those, some real life examples. And, and then in the base strategy, how you set one up. And then after having you set one up, we're going to get into more advanced stuff. So like my emergency fund looks very different now than my emergency fund used to look when I was 22 years old.
Yeah. So I think we should start a little bit from the basics. What an emergency fund is and what is the recommended emergency amount that people should save or get into.
So most experts will say you should have between 3 and 6 months of money in your emergency fund.
3 and 6 months of
expenses that you have personally. So this is your rent, your mortgage if you have it, car insurance.
Things that are must-haves or must-pay to survive.
Right.
Okay, what about, would you squeeze in a little bit for food, a little bit for...
Yeah. Whatever your monthly average expense is per month that you have to spend, not including fun stuff like going out or dates.
Right.
It's 3 to 6 months of that money set up.
Okay. Now let's talk about what the heck an emergency fund is. What constitutes an emergency?
Oh, that's a great question. Emergency is definitely subjective, but it's going to be your big events. And so I have a fund called non-emergency large purchase. But this could be like your tires go out, right? And you have to get new tires suddenly. Maybe you get let go from your job and you have 3 months of time or 6 months of time of runway to figure something else out. A major expense happens at your house, like water heaters out.
And this one happened when I moved into my new house last year in August. The rains in Missouri are the real deal. And they came in so hard and fierce that my gutters could not support the water and they became waterfalls. All that water came in beneath the front and back threshold and destroyed my old flooring.
Whoa.
And I was like, we just moved in. We spent all of our money to get in here. What the hell did we do? That's what an emergency fund could also be considered used for, where you were just like the unexpected, the unseen hospital visit, hospital bill, or hospital if you end up getting sick and all of a sudden you have to take 3 weeks, 4 weeks off from work, and let's say you're out of sick leave or whatever, what do you do?
Yeah.
So these historically would be real emergencies, and we'll talk about how to use them in the correct way and how to use them in the incorrect way, which I'm guilty of.
Right.
So
a lot of people will just have their savings account be their emergency fund, and you don't want to do that. You want to have another account that's your emergency account. And a big reason why is because sometimes people will be like, you know what? I've been saving up, but I really want that TV. That's not an emergency. You shouldn't do that. Some people will say, you know what? I've been saving up, but I want to go lift my truck now.
yeah.
And I look at this, I've got $5,000 in this account. You should get your numbers. Remember 4 or 5 episodes ago, we said you need to get clear on what you spend, so just start tracking. Take your average monthly expenses and get 3 to 6 months. Know that number and set a target. Some of you might be like, oh, no big deal, whatever. Other of you might be like, oh my God, I spent X amount? Woo! So still, figure out the number as it sits, times it by 6, and shoot for that. And there's some really, and the worst way to do it is to manually do it every paycheck. Dane, what's a better way to do that?
The automated way.
Okay, can you, if this is the people's first episode, they haven't heard our older stuff, what's to do?
Absolutely. And I am also guilty of this. For the longest time, I was doing it manually. And Hugh, during one of our morning meetings, was like, hey, everyone, pull out your phones, log into your banking app, which every bank has an app now, and go to set X amount on auto. And I was like, I can't do that. I've never seen that function. And in less than like 60 seconds, I'd set up my entire automatic draft.
And then you just forget about it, right? So
Pay immediately funnels into the emergency fund account,
Right.
is what we mean.
a lot of people, they'll go through and they won't do that. They'll do a manual step and they'll forget about it. And so it's really, really critical to take the human out of the equation and pull the human out of the equation and get into the habit of just thinking through it once and letting it do that. So there's a concept called pay yourself first. You heard about it from our budgeting episode and the episode before that. To set it up, hey, X dollars goes here. Now, if you're going to prioritize savings versus emergency fund, which should you prioritize first?
Everyone would, I think like everyday wisdom would be you do the emergency fund first.
Exactly. Most people will say you should do your emergency fund until you have your 6 months up. Once your 6 months is saved, at that point in time, you figure out what that is, and then you just let it roll forward. And then instead of contributing to your emergency fund anymore, you then reallocate the monthly funds. So here's an example. If you were contributing $100 a month in your emergency fund until you hit $6,000, then at the $6,000 mark, you don't just stop with $100. You take the $100 and you reallocate it to savings or investings or something else.
Which sounds easier said than done. And I'm also guilty of that, where all things were funneled into my savings, just general savings. And then life happens, life comes up. Did we budget for this? Did we budget for that? Are we able to handle your everyday small expenses and emergencies that might arrive outside of your regular budget? And so automation was the key. I love that you brought that up. And 2, not getting suckered into categorizing things in your mind as an emergency that aren't. And I'm going to give you an example because the world is designed to steal your money. And if any of you are Costco shoppers, like my wife and I, and bargain shoppers like my wife, she gets anytime, marketing works so well on her, Hugh. She was at Costco and they're like, hey, free water treatment test, from the thing, and we'll give you a $25, $40 gift certificate or voucher. And she's like, ooh, $40 gift certificate, and they're going to come talk to us about water. The guy comes out, gives us his spiel. I think I mentioned this on a previous episode.
Yeah.
And the next thing I know, we're looking at a $10,000 water filtration system. But in the way that they had designed the presentation, it was almost like if we keep drinking our acidic, toxic water, we're probably going to die soon. And then here's the solution of only $10,000. And it almost switched our thinking into, this is kind of an emergency. This is kind of a big deal. Maybe this should be allocated to that because water is health. It's like, so again,
would you not pay $10,000 to save your family?
Yeah, and have soft skin?
Yeah.
No, but whatever it is, there are so many things out there, ploys on the news, at businesses that you even trust, that will make you second guess your saving type, and a lot of times try to motivate you into allocating funds that would go there for a real emergency, a real safety reason, into something that is a false emergency. This happens, again, just be very aware. any mechanic will put you into a false emergency a lot of times, get a second opinion. Same with kind of sometimes a dentist or a doctor. I have saved thousands and thousands of dollars a year by getting a second opinion.
Yeah.
And just being like, this is an emergency. Oh, wait, it actually really isn't. And there is a lot more cost-effective way. I told you that the entire filtration system that I found out I could just go buy and put in myself was like $409.
Right. For all parts, and then you just do it yourself.
Yeah. So anyway.
It's it. And that's being smart. And a lot of people will balk at the idea of an emergency fund and they won't take it seriously and they'll just say, oh, well, I have savings. Really know your numbers and find that amount. By the way, we have a sister podcast called Small Biz Rescue. And this also applies for businesses, right? So go check out that podcast if you're a business owner. But there's a whole system called Profit First that's dedicated to safeguarding you from the world to protect your business from, well, emergencies.
Right.
And you should probably figure out, hey, it costs X amount a month to run my company. Payroll is $10,000 a month. So you need $60,000 worth of emergency reserves. Oh, but I have weds. That's $4,000 a month. Add it all up, figure the number out, because you're going to want that peace of mind. And if you have the peace of mind, you'll actually end up being better off and take bigger risks because you have the comfort of knowing, hey, I'll be taken care of. I can figure it out. I've got time if something goes wrong.
Well, and more often than not, if you have a target, you are way more likely statistically to hit that target as if you don't know any number at all. So if you're just saving to save and there's no real target, sometimes people are disciplined enough to put enough money away for the things that come up. More often than not, especially as Americans, we're just not. So the target, the automation part, the classification of what a real emergency is. And I like, Hugh, that you said, what do you save for first, emergency or savings?
Right.
We don't think about that because in Pay Your First model, it's pay yourself first, meaning savings, but they don't say emergency savings.
Right.
So we're classifying that, being ultra clear on that, what type of savings should come first, and then regular savings comes above and beyond that.
Right.
And so super good point. I never really thought about it in the beginning either because I'm like, oh, you just save into the bucket of saving.
Right. And there's a method to our madness, right? So the whole series that we're doing, the very OG episodes, they're designed to take, hey, I have zero financial literacy, to, at the end of it, be like, you're an investor that can invest hundreds of thousands of dollars and become a millionaire. We're going to get you there through the knowledge. Some of you that might take weeks, some of you that might take years or a decade or 2 decades to get to that point. But the fundamentals never change.
Yeah.
So one critical thing, too, is should you be investing or should you be stock your emergency fund? We're starting from where are you at, and then budgeting. Then we're starting to introduce buckets to you. Emergency fund is the first bucket. Each bucket will stack on top of itself to be more and more mathematically advantaged, but you are going to be the person that decides what that means for you in your country, in your companies, because you're going to be listening in the future. And this present day, we're going to show you that's what we do and what is the mathematical best practices. And at some point, it's going to diverge because there's a Dave Ramsey way of thinking, which is no debt.
Yeah.
And invest until you die at age 70 and you have 3 years to live, thank God, with a little bit of money. And then you have the other people who are way on the other end, which we're not quite there, which is leverage everything, get loans, invest, big risk, big reward. And we're somewhere in the middle. We were like, there's a healthy amount of risk to take that changes for everybody. And yeah, so investment returns. Should I invest my emergency fund in a 401k in a S&P 500 index fund, or should I just leave it in a bank account?
So I am definitely not the expert on this, and I trust way smarter people than me because I have never traditionally done this correctly. I see the wisdom in putting your emergency fund in something that's hard to get to immediately, like an S&P 500, or something that's safe, that has the track record of slow but long growth. I think I should have done that a lot sooner. And so
your emergency fund can grow with
absolutely inflation. Because it's like paying yourself a mini 401k. Right. A market is supplementing you what a work matched 401k would be.
Now, we're not suggesting you do this.
Yeah.
The reason I asked the question is because so many people are out there and they're like, well, why would I stick my money in a high yield savings account that's returning 2% right now or 4% instead, when I could be in the market earning 12%? That's not the purpose of the emergency fund. We're going to get there. The purpose of the emergency fund is to make sure you're covered for 3 to 6 months so you can have time to figure it out. We build you to the point that you're talking about.
Right.
My answer right now is I've got about 3 months of savings, emergency fund, and then the other 3 months, I just roll into my investment bucket. I know the number very clearly, and that just grows and compounds over time. And we're going to cover that into in an additional thing. But I recommend not doing that. If you're just starting out, you're not confident, don't do it. Put it in a bank account. Doesn't matter that inflation's eating you alive. It doesn't matter any of that stuff. What matters is you have enough money to make it for 3 to 6 months. If you had zero money coming in, that's the baseline. It is security blanket number one. And it's okay. If you can put it in a high yield savings account, that's where I would do it. I use Yada. There's a link below in the description to that. But use any high yield savings account. At any point in time, you can Google it and like 5 banks will pop up. It changes all the time. I was an Ally for a little while. It's definitely doable.
And another thing is, there's some I wouldn't say truth to this, but there's a benefit to also keeping a safe in your house that has cash in the safe, because then you have control over that asset, where sometimes if a bank seizes your assets or freezes up, there's a million things. A bank goes belly up, your cash and your holdings, good luck getting that back. So if you're not going to worry about the rate of return on some of this and it's 3 months, it might be better to hold it in cash or something that's close to home where you can access it when you need to. So that's another really good option.
Yeah. And we had a viewer submit a question from Luke out of Oklahoma.
Hey, Luke.
And Luke asked, hey, Hugh, Dane, what is your emergency plan/fund? And I'll let Dane go first for that one.
I have a lot of guns, Luke. No, this is actually a good topic because I'm going to be really candid and upfront with the audience. Where my emergency fund got blended with my investment fund, I just didn't allocate it correctly. And so to your point and to Hugh's point, what that should have looked like is a divided, designated 3 to 6 months of income to said emergency that now has been repurposed into getting my ass out of hot water because of an investment fund. So I kind of lost track a little bit of the question, but where I think...
So can you share with the viewers right now, you have an emergency happening.
Yeah.
And one, thanks for being so vulnerable for viewers so maybe they learn something. What is going on, the high level, what's going on with you? And then, so what's going on? And then we'll talk about how your emergency fund's saving your energy.
Yeah, absolutely. So one, I have to say, without any emergency fund, I truly would be in hot water. So good on us for putting some things away in anticipation for a true emergency. And at the end of the day, it was me being tied up with several properties that I now need to offset to actually correct some mistakes we made and get us back in the green, back in the black. I can't remember
Green,
the expression.
black, whatever.
I'll take either, as long as it's not red. But at the end of the day, what had happened is now I am scrambling to offset 4 properties with a next to no renovation and setup budget before we list. So what would effectively take at least 6 to 10 grand, I think, to do this thing right. I'm working nights and weekends, getting my hands dirty, painting, fixing things to avoid having to front that upfront cost after I've already dug into my personal emergency savings to front the bill for a lot of the things I just can't do, electrical, plumbing, whatever that might be, because I have, one, I didn't set aside the proper emergency reserves for this specific investment entity, and that was on me. And I also had to leverage a line of credit that I will be paying off at the sale of the properties, but was kind of my backup that we ended up having to use to set up the property in the beginning. So I had to use my emergency reserve line of credit And then what I find myself doing now is having to also come up with the cost, the personal cost out of my own pocket to fund what the business or the money side of the partnership should have funded, and it's just not there.
So, and one, I appreciate you being so vulnerable, and we're going to just lay this out for the viewers. If you're listening and you're a real estate investor and you understood all of that, if you're not a real estate investor, I'm going to break everything down really, really simple. So Dane, first off, I want to start off with, we've made mistakes. I've made tons of mistakes. Dane has made some mistakes. Dane's currently paying for those mistakes, but he is the definition of someone who works for sweat equity. So he is working his butt off, and he's going to buy a property. He's going to do whatever it takes to make it work, and he's going to be beneficial on the other side. The foundation that the investment was made on was shaky from the beginning, and then an emergency happened, which was just the market changing, and he could not have foreseen that. And so his personal home emergency fund was what is getting him out of this. So he had 2 houses that were investments. That was all going good when the market was good. Then, due to strategic errors in decision-making that no one could have foreseen, that then started to go south.
Yeah.
And then at the same time, he was making 2 other good strategic decisions, and it just happened to be at the same time. Now suddenly he's got 4 houses in his hands, which is going to terrify any people. But luckily our day job is doing this. There's way more stressful things that we are used to dealing with. So we're going to get into a whole investing, real estate investing, all of that stuff will be later. The main thing is his emergency fund is what's saving him right now.
Yeah.
And also mistakes were made in that you should have an emergency fund for your investments, whatever those may be.
Yeah.
Because those should have kicked in first. So I'm going to give you an example. Mindy Jensen, who was on one of the previous episodes, she's like, oh, things look great. They're going great. And then her water heater went out. Boom. Immediately there's an $800 bill. And she's a live and flip investor, but she also lives there. And so had she not had emergency reserves, she would have dipped into her, personal savings or it would have gone on a credit card. Now you're paying 25% interest or something terrible like that.
Right.
So this is all stuff that we're going to get into. And Dane, thanks for sharing that. For me, my emergency reserve is, I just said it, I have 3 months of all the things for the business, all the things for the personal expenses. I'm basically in a YADA account, high interest savings account. And then outside of that, I have 3 months worth is basically in a brokerage account that's invested in VTI. And it's just growing and compounding. In addition to that, I have my actual savings, which is going and stacking on top of that. So it's all growing. Why was it there? Hugh, didn't you just say you needed the money? Well, it takes 3 days for me to get it from the brokerage account to my bank account to spend it if I need it. Yes, there's tax implications. Don't worry about that. Because if there's an emergency, then there's something else. So I basically have credit cards. I have credit cards to hold me over for the 3 days that I would need. But remember, I said I had 3 full months worth in the YADA account. I can take those 3 full months worth and get me by. If I need something within an hour or 2, that's what a credit card's for. If my tire goes out, if I need to buy an emergency plane ticket to go see a family member, a credit card can pull it up, and then I'll pay it off to 0 at the end of the month, and I'll pull from the emergency savings and pay that off. So that is my rough strategy. Now, emergency plan, we'll get into more on the investing side. I think I said it. I think I control like $6 million of real estate right now, and I don't know, I'm like 2.5 to 3 millionaires. So I have like $4 or $5 million a day or something like that. I should probably know my numbers more. I know what my monthly expense is. I'm not really paying attention to the big picture. But I would basically liquidate a third of my portfolio, sell it off, get the cash. I'll probably take a month or 2, take that cash, pay down my existing debts, and then I'd be just fine. I'd be able to cash flow. So my super worst case plan is I could sell off a third, probably pay off everything that I have that I own by myself, and then just figure out, start from ground one. So I'm in a place that I can retire indefinitely. I'm growing and scaling still because it's fun. But at every plate, I'm always looking back and I'm moving the safety stop. So if I get in trouble and I roll backwards, I hit the stop pretty quickly.
Yeah, and incredibly valid points. Great strategy. The thing here is discipline. Set it and forget it. Create an amount. Build the reserve, the emergency fund specifically, before your main savings?
So I want to correct you or jump in.
Yeah.
People hear the word discipline and they shut down, they freak out. Don't worry about discipline. I am not a disciplined person. If you listen to any of the podcasts, I'm a sloppy, disorganized mess. I am not disciplined. And so what I did is I did the thinking once and I automated it. Habits are more powerful than, in my opinion, than discipline. Habits are what are going to take you. So if you wake up and you have the habit of eating clean and you have the habit of exercising 3 times a week, then you're probably going to be a good person, a healthy person.
Sure.
Or you could be a bad person, but a healthy bad person. Yeah. Same thing. If you have the habits of doing that, now habits are tough. They're still involved the human. So I try to remove the human out of the equation because I don't trust me. I'm incompetent. I'm the weak part. I'm what's going to break first. So I'm just not going to give myself the choice. I'm going to have to put the systems in place to protect me from me. That's my whole mantra. Yeah. I'm a moron. Let's do what the thing that was smart was, and then automate it. And then I'll just observe the automation. If something's breaking, go see what's breaking and solve for the constraint again.
Yeah. Well, and you bring up something that's also...
It's not discipline. If it was discipline, I would be broke. I am undisciplined.
One thing, well, and it's a good differentiator, right? Because habits are also built off of great systems. So one thing that you've done well is you know how painful it'd be to get into a position where you didn't have the habits in place and the mess that could cause. So you just decided to bite the bullet, face what's difficult, and set up the systems in the beginning. Create the habits in the beginning to avoid the pain and suffering later. Right. Correct? So a few of the biggest takeaways from me, not just from our conversation, but the experience I'm going through right now, is bite the bullet, face what is hard, set the systems, create the habits. So next year is going to look very different from me. When I come to a position like this, I'm not going to let it get me to the place where I'm pulling out of my personal emergency savings to save my ass. I'm going to make sure that my investments are lined up with a reserve fund. Otherwise, it's not worth investing in. So it's...
Speaking of ass, that is a great analogy to what this is. This is what an emergency fund is for. Emergency fund is the toilet paper on the back of your toilet right now. And if you don't have one, shame on you. You're gross. It is an emergency reserve to get you through the next few moments as you figure out where you're going to get more toilet paper from.
Yeah.
It should buy you a few days to a week worth of time, but it's there to save your ass, literally. And that's what it's for. Anything beyond that, you can use your money to do way better things than buy toilet paper. But in the meantime, you got the toilet paper there, and thank goodness you do. So every paycheck, and imagine just, this is a bad analogy, but imagine you're just putting cash on that toilet paper roll, and that roll's going to
wrapping it up. So we all get into things in life, right? There's a million excuses not to start something, or you're too busy to do this, or I should have done that. And what do they say? The best time to start something was...
yesterday, 10 years, 20 years ago.
Right. And the second best time is... Right now. So I'm in my 40s. I still have a lot to learn. I still have to commit to new habits, to new learning. That's what this podcast is about. It's about people who haven't figured out the whole thing and did it right when they were 14, 15 and had everything lined up for them. It's the everyday people who are working their tails off and being like, I just didn't have time to think about this. I didn't have time to set that up. I don't have the right habits in place. So, Hugh, if we're talking to us, basically, or other people in the audience who just are like, man, you live with that anxiety inside yourself because you started too late, quote unquote.
Right.
You're filled with fear around this subject because, like, oh my God, I've never put an emergency savings fund together.
Right.
And I'm living beyond my means. What advice would you give them?
Super chill. Just start. I mean, the amount of investors that go from, I'm so afraid I don't know what I don't know. Like, here's the 3 stages of not knowing something. One, you don't know what you don't know, so it's terrifying. And you know what you don't know, and then you know the thing.
Yeah.
And right now, when you go from not knowing what you don't know to knowing what you don't know, is very, very easy. Every investor I've ever worked with, every person, business owner that I've ever worked with who's slightly interested, they figure it out very quickly. And they go from, oh my gosh, I think my life's in the toilet and it's going to be very bad, to, within a matter of months, they're extremely comfortable, way more financially healthy. And then they take that next step, which is investing. And then they start investing and they grow and they learn. And then within a year or two, they are completely confident and know what to do.
Yeah.
So many people are just terrified because they were never taught this stuff. And that's why we're doing it. You're 30 and you started 38.
Yeah. Kind of getting serious about all this stuff.
And you just learned about that because I talked to you and they're working for me somehow. And there's 50-year-olds, there's 55-year-olds, there's 60-year-olds that are listening to this, and they have unfair advantages that a lot of us don't have. And so we can also show that. We will show that in the future, but just start. It's very simple, very straightforward.
Yeah.
Nothing to be afraid of, and it's completely doable.
And it's so practical. Just start is real talk. And coming from someone who is in the middle of digging my way out of a shitstorm with my newly funded emergency fund that I was so excited about and now is gone, I would say don't panic. Panic is what makes you make the worst decisions. It creates more anxiety and it takes you down the rabbit hole. And a lot of times it creates tunnel vision like this, and you can't find your way out because you're panicked. And so through this whole experience, it was the real moral of the story I've learned is don't panic. There's options. There's friends and resources and people that are willing to jump in and help you. My brother-in-law, who just moved here from out of state, saw that I was like in a complete panic, and he's like, hey, I'm here to help you with everything I can, and I don't want anything. He's like, I don't want any money. I will come and paint nights and weekends. I will scrape windowsills. I will finish yard work. And people will just show up to help you when you really need it. And so don't panic. Just put your shoulder to the wheel and work and focus on what's in front of you. What I have learned through this is don't be caught off guard, or don't think that you'll get it all set up later, to your point. If you don't start now, like I can promise you today, tomorrow, and every day moving forward is going to be a very different story where all of my funds will be allocated in the buckets, creating the habits now. So next year, I don't find myself in a similar position.
And he's coming at this from the point where he's like, oh, I'm starting, I'm too late. And I'm going to tell you that when I was 22 or 18 or whatever, and I was starting this journey, that all the people around me was like, well, I'm just a damn kid. They're not saying that, but they're like, well, I'm just a kid. What do I know about investing? That's intimidating. I'm not going to start. I'll start later. And so you have the two sides of the same coin, and just freaking start. Like, just start. It's easy. If you're 18, if you're under 30 and you're listening to this, you're going to have so much money shoved up your butt just because you have good habits, and it's going to be incredible.
Yeah.
So just start. That's the one takeaway I have. Everything else for our listeners before we close out.
Just keep after what your heart is set on. Keep a strong vision. Don't let things push you off the road. Don't panic. Don't let fear set in. Like, you will conquer the day, and you will conquer each step to get you to where you want to be. And just never lose track of that. Never lose track of that side of yourself and what you're doing it all for. And I think that's one of the best things that people can do. Everyday people who work jobs or who own businesses, stay focused. Don't lose sight. When shit hits the fan, just don't be afraid to act and make a plan and go for it.
We're literally tons of viewer questions. If you would like to submit a question, you can go to hughcarnahan.com/podcasts. Or send us an email at fumoney@hughcarnahan.com. Guys, we love this stuff. Ask us questions. We listen. We read every review, all the feedback. If you got value, please rate us on whatever platform you're listening to this on, and we'll see you next time.
Hey, everybody. Thank you so much for tuning in. As always, Hugh and I really, really tried to deliver value in these episodes. So if you learned something, you thought something was funny, you enjoyed a guest, please hop on to wherever it's being hosted, whether that's Spotify or Apple, and drop us a 5-star review. If it's anything lower than that, email us separately. We may or may not respond, but at least all of the things that we did right, let us know. And truly, if we did anything wrong, or if there's guests that you want to see, we aim to please, and you just want to be a guest on the podcast, how can they get a hold of us?
If you want to be a guest or ask us any questions, you can email fumoney@hughcarnahan.com and let us know. Again, we read every comment that comes our way. We actually have 2 or 3 super exciting ideas for shows that have already come our way. Again, we appreciate everything, guys. Remember, real quick, we are not experts at anything. We are It is not financial advice. Make sure you do your own due diligence. We are for entertainment and educational purposes. Don't listen to random strangers on the internet. We hope to share our message to get as far as we can to normal, everyday folks, blue-collar folks, military folks. And this is information that all of us should have. And so if you liked it, please share it. Guys, we will see you in the next episode.
Woo!